Hey guys, Boris Schlossberg from BK. Great to be with you as always. I've been away for a few weeks. It's Labor Day weekend in the States, and I wanted to share with you one of the more interesting ideas that I've been working on while I've sort of been away and doing a lot of experimentation. I think you guys could find it very, very interesting because it's sort of the counter to everything that I've been working on in my Scalping University series, all of the flow setups that we trade in BK, all the flow setups that I trade on a day-to-day basis in my Twitter feed. This is really for people who love to fade, and there's so many people that love to pick tops and bottoms that I kind of wanted to fool around with a flow-based setup that made a lot of sense within that kind of a structure. Without much ado, let me just sort of set up for you exactly how this setup works. Basically, the fade setup is a mirror opposite of the flow. Fade begins where flow ends. And if you want to look at the rules are sort of basically very simple. All of you know that my key price levels are the 50 level and the 00 level. And what I really want to do when I'm looking at a fade opportunity is I want the price to go through at least one and ideally two levels. In other words, we're looking for extension. We're looking for price momentum because what you're trying to do is the opposite of flow. You're trying to find the exhaustion of flow and trade the move the other way, right? So the difference here, though, is that unlike the flow setups where we're coming in limit, we have relatively wide stops, relatively short targets. Here, all the dynamics are kind of very different. You don't have a choice in terms of coming in at limit because markets typically in these type of situations move very, very fast. What you're doing effectively is providing liquidity at the moment when the market desperately needs it. You're acting very much like a market maker. You're buying low, selling high for that particular time frame. So you don't have a choice to be precise. You kind of just have to find a zone. And to me, the key thing here is that I don't want to be greedy. And number two, I don't want to be a hero. In other words, I'm either right or I am out. But the general setup that I try to structure is the following. My buy market zones below the 50 level are going to be somewhere around the 35 and 40. And below the 00 level are going to be the 75, 80. In other words, what I'm looking for is the price to just kind of catapult down through the 50 or the 00 level, and I want to be buying underneath those levels. Because remember, what's our notion in the flow setups? That at 50 and 00 is where we have a ton of stops being made, right? And by the way, that little ping in the background, that was actually one of these setups getting hit. So I'm going to show you in real time exactly how the setup works. And what we're trying to do is once the stops get cleared, we're going to come in as buyers or sellers and try to run the price action the other way. We're going to join the market makers and see if we can move the price action the other way, which is why it's very critical to understand this is not a fundamental setup. This is primarily a market price action setup, and therefore you do not want to be a hero. You don't want to be sitting there trying to bully your way into a fundamental position if you're wrong. You're in or you're out. So the sell market zones above the 50 is 65 to 60, or the 20 to 25 above the 00. Again, not precise. You're just coming in at market, trying to get yourself into those zones. And here's the best part. Typically in our in our flow setups, I'm using very large stops, relatively modest limits. So I have to be accurate at least 70% of the time to be profitable. In this particular setup, you don't have to be profitable too frequently. If I'm using 20-point limits and minus 30 stops, and the reason why is because if it's not stopping, you are frigging wrong. Get the F out of the trade. That's the most important thing that you can understand about this setup. If it's not stopping, you can come back and do the setup over and over again at another time. The beauty of the +2, -3 type of a setup is if I'm 65 or better on my zones, if I'm picking the right types of entries, I'm actually net positive on a setup with a relatively low accuracy ratio. If I can be accurate at 70 to 75% of the time, this is a tremendously valuable setup in terms of looking for opportunities. But again, this is an interesting idea, but it requires constant monitoring. You cannot let you put out limit orders on this particular idea, and obviously you want to just be very swift and nimble. So it's a kind of idea that works well if you're looking at screens all day long. But if you're not, if you're sort of a casual pass-by type of a trader, definitely not the type of a setup for you. Anyways, let me show you the good, the bad, the ugly in a couple of these setups so that we can understand visually what the hell was I doing. So this is right now NFP payrolls Friday. I'm trading pound dollar, and I want to show you the good, the proper setup, and the improper setups that I did here. So pound dollar here, we raised to 61.50, then we come back down below the 00 zone, right? And I buy here at the 90 level, not the right buy. This is a critical thing. This was a bad purchase that I was just very lucky to make money on, right? The proper buy was to buy into the 80 zone. Buying into the 80 zone gave me the right risk-reward ratio because I bought underneath the OOs in the point of maximum liquidity sweep. When the market bounced back up, I was able to make my T1 very quickly, and boom, I limited myself out. I was very fortunate with this particular trade. I was just experimenting, and I was able to blow it out. Here, I repeat the process just a few minutes ago, buying down again into the 75, 80 zone. Remember, I am not being specific. I just want to purchase it relatively within the area where I want to be, and boom, I get limited out, and I make the money. Here's a trade in the Aussie dollar, similar type of idea. We're buying risk on a just a flush to the downside, because remember, we flushed to the downside. Those of you who are reading my Twitter feed, I said, listen, if equities go minus 200 but kind of stop, risk is going to bounce back. So I was looking for these ideas to kind of bounce back. But again, I did a very poor execution. Here, I should have been buying around 40 because remember, my buy zones below the 50 is 35 to 40, limiting myself out at 60. I bought a little bit too early at 50 because, of course, real life and ideal life don't always meet, and especially when I'm experimenting with these kind of setups. It really takes a little bit of time and practice to get it right. But generally, this was the right idea, bad execution. Again, I was very lucky. I made the trade in the Aussie. Last thing I want to show you, and let's just ignore the massive amount of other trades here, is actually, let me just go to like a 5-minute chart so that we can all look at the Euro Swiss in much more detail, because I think there are lots of flow and counterflow setups in this particular chart, so that's why I kind of just wanted you to start to ignore all of the other trades. But here is, again, I'm actually going to mark it to you what's bad and what's good. Bad trade. Bad trade. I'm buying right underneath the 1100, the 00 level, right? And what happens? I get flushed. I get stopped out, deservedly so. Why do I deserve to get stopped? Because this wasn't the right zone. Remember, you wanted to clear the stops. You wanted at least 20 points of stop clearance before you come in and make the market, make the bid on this particular move. This was, by the way, like European session. Euro Swiss was going absolutely crazy. They were just liquidating Swissy left and right. But here's the right setup. After I get stopped out, I reconfigure, and I'm buying underneath the level in the 70s, in the 70 zone, which is the proper price point. And when they came back to push it back up, it was a very easy TP that made that made it out over here. So the critical thing here is, and this is why I kind of wanted to show you the good and the bad, is that if you're coming in at the right zone level, you should be, if you're buying sort of the liquidity flush, then you should be able to make TPs relatively easy. If this is a one-way market, well, you just get stopped and you're gone. It's minus 30. You can come back and regroup and do another trade. So last trade, I kind of just wanted to show you. This was a limit out. Again, me putzing around with the with Euro Swiss. The proper trade here, just to show you. I mean, I'm trading it both ways, to the upside and to the downside. The proper trade here, I should have faded this 1160, because this was above the 50 zone. I should have traded about 65 and just simply bought it down. But, last trade of the day before I was screwing around, I actually bought underneath the 50, because remember, I'm going through a couple of levels here, and I bought underneath the 50 in the 35s, and as you can see, because I made the purchase in a relatively right zone area, even though I was just kind of poorly, not perfectly executed, not really well done, but just because I bought myself at the right price, I was able to TP out. That was the thing you guys heard just a few seconds ago, and I was able to TP myself out for a nice 20 points on this particular trade. So obviously, these setups occur all the frigging time in all of these pairs. And they really require a lot of monitoring, a lot of watching. And the critical thing here that I kind of like is that you do not have to forecast a long extension of a price. What you're doing is you're reacting to a particular price structure in the market. You're reacting to basically the flow that's already happening. You're coming in on the side of the market maker, so you generally have a better chance than 50-50 to being right, as long as you remember the two critical things. Don't be greedy, get in, get out, and buy at a generally good level. That's the critical thing. If you can buy underneath the 50s and above the O's or below the O's, depending on whether you're selling or buying, then you should be structured properly if the setup for the setup to work well, if it's going to work well. And more importantly, the other thing I love about it is, of course, that it's a plus 20, minus 30, so you have a much better risk-reward ratio. What I don't like about it, or what's sort of very difficult for basic retail traders, is that this is not a setup that can ever be done on a sort of a set it and forget it basis. You have to watch the market very carefully. You have to watch the price action very carefully. You have to understand the trade flow, the news flow, and all the other stuff that's going on, and you cannot hesitate. This is a market-only step in front of a train and hope that it doesn't bowl you over. And if it doesn't, then you're sitting with profits in your account. So anyways, I'm wishing you guys the best of luck. Really great Labor Day holiday weekend for those everybody in North America. Everybody else, I will see you guys on the desk back next week. Of course, as always, Twitter feed at FX Flow. And for those of you guys who want to come in and trade with us, always bkforexadvisor.com. Do not trade alone. We've been just banging the hell out of our flow trades and proprietary trades for the last several weeks. So I invite you guys to join us and take a look at what we got to offer. I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex Advisors. Over and out.